Ladies and gentlemen, it's your boy, Ryan Dins, for another episode. And on today's episode, we're going to talk about Bristol-Myers Squibb. Should I buy or should I sell? Well, we're going to tell you right now. Alright, Bristol-Myers Squibb is very, very cheap right now. It has a PE ratio of 10.08. A few days ago, it was under 10, which is phenomenal. As you know, most stocks are, right around the 15-20 range that you want to buy. More popular growth stocks like Apple and Microsoft, they're around 35 or so. So the fact that it's almost in the 9s is like insane. Especially for a company like this, a blue chip company that is blowing up. Also, their dividend is 3.03%. That's their yield at the moment, which is not that good. However, they have consistently raised dividends for 14 consecutive years. And if you look at the 10-year average of how much they've raised it, they've raised their dividends an average of 2.75% for the last 10 years. Now you might be like, well, that's not that exciting. But for the last 3 years, they've averaged dividend increases of 13%. That's pretty good. So my point here is, yes, it only has a 3% dividend yield, but if they're gonna raise it 14% each year, you wanna look at the yield on your purchase cost. So if you buy it now and it raises 13% a year, you do the math. In 4 years, it's gonna be worth about 50% more. So that yield will depend on the growth, but if it doesn't grow at all, the dividend, if it grows 50%, it's no longer 3%. Now it's 4.5%. So that's really good. You want to continue to count on these dividend raises. It's a stock that you want to look for future growth. This is not a get rich quick super growth stock that's going to go up 200% a year. No, it's been slow, but it's very stable. Another thing about this stock that excites me about it, Warren Buffett, who doesn't make a lot of buys, he'll only buy a few things a year. He just bought a huge stake in this. He bought some of this, he bought some of Pfizer, and he bought some of Merck. He bought a lot of Merck and a lot of Bristol-Myers, and only a little bit of Pfizer. So all the hype is around Pfizer, but you should be looking at this. This is a pharmaceutical stock that has a lot of potential to grow in the next few years. With all that being said, I think it's a really good buy right now. I am accumulating it. Every week I buy a couple shares if I like the price. This is a stock that you can expect might grow 10% a year for the next few years. I'm expecting to do that, and I'm expecting the dividends to increase. I'm expecting the yield to increase. It's a little bit risky because most of their business is between 3 companies. They make products for 3 different companies that are buying 50% of their product. That's a little bit risky, but as a value investor and as a dividend investor, I look for a few things, which is a pretty good dividend yield, a growing increase where they increase the dividends, and a really good PE ratio. And this has all 3. So I think this is a solid stock. I think that it should really be $10, $15 more right now. It is highly, highly oversold. I mean, this thing could go up a lot. This thing could go up 100% in the next 5 or 10 years. I'm not promising it'll do that, but I'm just saying if they continue to be a great company, I see this increasing. I don't think it's that much risk because how much lower can it go with a PE of 10? Who the heck is going to be selling this thing right now? Not that many people. There's definitely more buyers than sellers right now. Just don't expect explosive short-term growth. This is a stock you want to buy and you want to hold on to for years. And that's my analysis. Make sure you hit the subscribe button. We're going to have plenty more analysis coming up and plenty more money tips. So that's it.